Testing, testing, testing. JB here, JB here. Hope everybody's doing outstanding. April 28th, 2022. Going to talk really quick. We have about 12 minutes, 30 seconds to the open. First, just want to talk about the GDP, right? The first read on first quarter GDP came out. Estimates for 1% growth. It was negative 1.4% growth. So back-to-back quarters of negative growth equals a recession. That's the definition of a recession. So maybe the market's already pricing that in. So of course, you would like to see the number come in higher, kind of quell some concerns that the economy's not going to slow down. Inflation's not causing as much of an issue as it possibly could, and consumers are not going to get concerned and worried, but not the case. But at the same time, I think maybe the market's already priced some of that in. So maybe we start to pull off the Band-Aid. So let's get the recession out of the way. Let's get the next quarter negative and then go from there. So the market's kind of holding its gains from the Facebook earnings after the close yesterday. It kind of buoyed stocks that had pretty much looked like they were going to tumble into today. So kind of a good sign. We'll have to see how that all plays out. I put it on the watch list this morning that the last couple of weeks and months, it's all about inflation when you read all the headlines over the weekend. You read whether the Wall Street Journal, Barron's, Market Watch, whatever publication you might read. That's been the big headlines, and it's probably going to be over this weekend. It's going to be the upcoming recession, and it's easy because people need to read. They're going to read that stuff. People aren't going to read articles that say everything's rosy, market's doing great, nothing to worry about. Well, you're not going to read that article, but you can read an article that says, "Oh, here's the upcoming recession is possible. Here's what you need to do," and that's going to get the clicks. So we'll see what happens here today. I think as long as we close over 420, I'm a little confident. Well, not confident, but I feel kind of assured that maybe we can have a little bounce into the weekend, which will go against every narrative that's out there because it's very easy to create a bear case on the market right now. Bill Huang, I guess Hang, I don't know how you pronounce it. Let's see, he's not in here. Z's not in here, but he would probably correct me on the pronunciation. But just a crazy story. SEC complaint came out yesterday, and if you read it, it's like 50 pages long, and I skimmed through some of it because some of it's just kind of repetitive. But then the other part of it is just living through that last year when you saw some of these stocks just go nuts. I mean, Baidu, UPB was on Baidu, I think it was $100, and they announced some self-driving deal and what have you, and the stock just went bonkers. I think it went from like 100 to 350. And in my head, and not that I don't like Baidu, but I haven't liked that company since 2008, 2009 because the company was one of the slowest movers to mobile. They just were not, they lost their touch in terms of innovating, and then they were spending all this money on initiatives that never panned out. So I was never really a Baidu bull. So then to watch the stock really take off, I said, wow, maybe something, there's something going on with Baidu. And then sure enough, now you find out that Bill was leveraging all these banks, borrowing money, buying 50% plus of the outstanding share count, and of course the stock's going to go up. This is just insanity. People complain about naked shorts in the market. They think, Overstock.com was probably the best example back in the day that the CEO publicly attacked some of the shorters that they thought there was a naked short on the stock. And naked short means that you're shorting more than the shares that are available to short and not reporting it, which would cause downside pressure on the stock. And here's the reverse. He manipulated the stocks to the upside. Just crazy. So, because what happens if you own more than 5% of the outstanding share count, you need to file a beneficial owner statement with the SEC. So he has over 50% of the outstanding share count. He doesn't file that. It's mind-boggling. So, yeah. So he'll have his day in court. He'll probably get away with it. But just a crazy story. So I posted that in a watch list this morning that a lot of time, maybe there's some truth to some of these manipulation stories. Maybe there's other stories out there where people are owning more than 5% of the outstanding share count and not reporting it as a beneficial owner. Anyway, crazy story. Then on to Roku. Roku reports earnings after the close today, along with Amazon and Apple. Those will be the bigger names to watch. But again, with Roku, minimal debt, $2 billion war chest. Was it $14 billion market cap now? Obviously, it's down from $16 billion that it was when I was writing about it on Monday and Tuesday. I think there's an opportunity. Maybe it gets to 110, 120. I don't know. I'm probably it's tough playing earnings because if you get the wrong direction, the position might be bidless the next day. But I might take a flyer on some speculative calls, maybe 115, 120 weeklies, full well knowing that maybe it expires worthless. But at the same time, if there's some kind of surprise to the upside, the margins come in line or higher, there's a bigger monthly MAU increase, they're able to post some great guidance. I don't know, maybe it's 125, 130. So not the best environment to be trading calls on some of these stocks going into earnings, but I think there's an opportunity. Not to mention it's at its pre-pandemic lows, so post-pandemic lows. So that's kind of the thought process there on Roku. Boston Beer just tough yesterday, all the way up to 380, the 200. 50-day moving average 379, 378. Then reverse course $20. Just have a couple calls left, so I'll probably just hold on to those pending it holds 350 or so today. Domino's Pizza reported a miss on earnings. I was looking at the puts the last couple of days. It's one of those names, and I've talked about. They have $5 billion in debt. It's a $16 billion company. They just keep kicking the can down the road in terms of refinancing their debt. As rates go higher, it's going to cost more interest to service the debt. It's obviously going to be a hit on their earnings. I think they earn $500 million on a yearly basis. It's probably going to go up as well. Who knows? But so you're talking 10 years just to pay back the debt. So we'll see what happens here. The 300 calls, I think 310s were over $1. So you're talking the stock has to move down $60 or over 20% just for the 310s to pay out a decent amount to hold that risk. So just tough one here. It's probably going to crush premiums down here 355, close at 372. I don't know if I'm going to play it on the downside because it seems like it's one of those names that bounces after bad earnings. So maybe it gets a washout down to 340. Maybe I might look for some calls or weekly speculative calls today. But I think you start looking down the road and it's like, how can you not picture a company that's debt laden? And there's a lot of them out there that obviously they're to service that debt, it's going to cost more money. It's pretty simple math. So we'll have to see the Domino's Pizza, how that reacts today. What was the other name I was looking at? Sherwin-Williams looks great. Probably maybe one of those names. Just only monthly strikes there, but another upgrade this morning from RBC Capital. Took Sherwin-Williams to 342 from 315, and then you have Deutsche Bank maintaining a buy rating, taking their target to 315 from 330, but still substantially higher than where it is now. Another name to watch. Unfortunately, only monthly strikes, so tough to play Sherwin-Williams, at least right now. May strikes were those 310s. Yeah, tough. 320s maybe, but even that, this is not the type of environment to look for longer dated calls yet until we find some stability. So I think that's it right now, folks. I'll try and get back on the audio midday. Hopefully today is a little better than yesterday. We don't have deja vu where market finds highs right at the open, sells off till 10:30. Ramps till I think it was 1 o'clock. It hit highs again and then just melts to the close. Not the type of environment I do well in because I need to have some conviction, and those type of swings don't give me conviction. Now, if you're a scalper and you're able to, trade intraday and watch, on an hourly basis, to be able to open and close positions on an hourly basis, then maybe this is that'll suit that person. It's definitely not the type of environment I do well in. So. I think it was Tuesday and Wednesday did similar action. Monday, similar action all 3 days. Monday we reversed, the biggest reversal, 56 times that's happened. Down over 1.5% to close up, up over 0.5%. Tuesday, same thing, open higher, but then sold off, no bid. Magic hand didn't come in, closed at lows. Yesterday, gapped higher, sold off, bounced, lots of chop. So hopefully today we can kind of get this pattern out of the way and the market holds its gains. And then Apple and Amazon can report decent earnings after the close and kind of put a bit in the market, at least short term. So that's it. 3 minutes to the open. I'll try and get back on the audio. Let's have a great day. Rock and roll.